while the price has been coming down, that oscillator was elevated. And we've seen something similar here before in late July where the price came down, oscillator was elevated. That was a low after a huge decline over the summer. Same thing happened, we come down, but then oscillator not hitting the bottom of its band. Ladies and gentlemen, Keiki here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 0.3%. There. On the S&P Nasdaq, pretty much flat. Semiconductor did get hit today, 2% negative. Dow 0.4% positive. Russell down. Transport up along the banks. Energy also got hit, 2.5% negative. Biotech is up. Healthcare also up along the utilities. Looks like home builders flat. Retail emerging market down a little bit. Bitcoin down. Gold, silver, miners are down quite a bit. Dollar up. Oil down. Treasury down. VIX down as well. Let's do a S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday. It looks like we actually saw another down gap this morning. As you can see here, it looks like we dripped lower for the first 3 hours or so, but we did find support at 390 and 391. And as I zoom out, you'll see why this is an important level. But what happened was, though, on the 4th and 5th hour, for the first time since this decline this week, buyers were able to reclaim and close above the micro-term moving average. Do you see that light a teal moving average here coming down, right? That's been acting as a resistance last several days. Really making the buyer's life miserable. For the first time, looks like not only we fill that gap, we're able to break above the micro-term on that 5th hour and kind of propped itself up using that micro-term as new support. And we did close the day above the micro-term moving average there. So at least we might be seeing that, the oversold bounce here. At least we're seeing the micro-term sentiment shifting now that bulls were able to reprogram that micro-term moving average. Keep in mind, though, there cannot be any shenanigans to the downside. Bulls must ride this at least a day to really solidify that micro-term to support the buyers. Let's zoom out and you'll see this is an important level. First of all, I've been talking about that Fibonacci level this entire week. As you can see, right? That's the peak there at 430, and that's the low around 360. And this is a level, this is the last level of Fib, coinciding with the prior resistance and prior support, which means it's a pivot. It's a pretty strong pivot because it's going all the way back to late June. You can see here, highs, low, and we got to that level 390. Not only that, this is a level where we saw that up gap. That up gap did get filled today. So we have about triple support levels here. Again, last level of Fib, the gap support, the pivot, right? And we do have the rising uptrend support at 390. So we did see that bounce, and this is the important level the bulls needed to defend. Obviously, it would have been better, as I talked about yesterday, it would have been better if the buyers would have kept that up gap right here. If they would have protected it, it would have been much better. But now what the bulls need to do is they need to probably make their own up gap or some sort going forward. If not, we do have my short-term moving average coming down at 403. And then my long-term moving average around that area, and then the midterm at 409. So looks like potentially some of these levels here, we got like the recent swing high at 400, right? That swing high right here. at 400, and they got a 403 at short-term moving average. Some of those areas are going to act as resistance, right? That's why buyers need to see some sort of jump start to keep this, because one day little pop isn't gonna do a whole lot, because we've seen so much bearish pressure in the last 2 weeks or so. So bulls are going to need more than just a little pop here and there, right? Let's check out that oscillator. So here's an interesting part of this oscillator, which we've been talking about and following up this entire week. One thing we talked about is that, market's been coming down pretty severely, but that oscillator has failed to kind of retest that, you know what I'm saying, that oversold level, that purple line here. Instead, while the price has been coming down, that oscillator was elevated, and we've seen something similar here before in late July where the price came down, oscillator was elevated. Same thing happened at the low here in early, mid-June, right? That was the low after a huge decline over the summer. Same thing happened, we come down, but then an oscillator not hitting the bottom of its band. And that's something we talked about. I was warning the bears that you must put that oscillator all the way to the top of its band if you want the move to continue. Remember how the buyer's been doing that right here, putting the oscillator back up and then get that leg higher again. But when you don't, that tells us, that's what we have these bullish divergences. Basically what he's saying is bears are really pushing it, and potentially this down gap we saw this morning, possibly an exhaustion down gap. And if that's the case, bulls can possibly get that oscillator to continue to advance, maybe something like this, and possibly you could see maybe at least a couple of days of oversold bound, right? So keep in mind though, this is the area, this is the vicinity where we got so much bearish momentum that shenanigans are a possibility. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening, Globe Train tomorrow.